Hey bro, you get a problem tick by it?
Tick still like just scary.
Well, it's not too bad.
Okay, good morning, everybody. So I'm gonna record this because we have somebody out sick, and so we're gonna do it this way. Did everybody get notes or has access to notes? Okay. And if you're still having problems with the book, right, come see me before we get too much further into the semester. Looks like most people are logged in, so that's great. I'm not going to give you a quiz because we didn't have time to do it this morning. I didn't have time to give that class a quiz. So I'm not going to give you guys a quiz, but I will ask you from your reading, how do startup companies get their cash flows?
There are various ways. Usually someone like an angel investor or a capital.
Venture capital?
Yeah,
Right, that's exactly right. So there was a section there where it says startup companies, they get funding from investors, right? So my questions that I ask are just going to make sure that you've read. They're not going to be like super challenging. I just want to make sure that you're reading. Okay, so that would have been the quiz question. You would have got 100. Okay, so like I mentioned, right, we're going to start with this topic, which we said comes from financial accounting. We're going to talk about the statement of cash flows. So, actually, let me take attendance real quick. Olivia, Arthur, Lawrence, Cohen, Ruben, Burke. Am I saying that right? Okay. Pavel, Birch.
Birch.
Thank you. Sabrina, Kaio. Am I saying that wrong? Nothing. Camilla.
Yes.
Maximilian.
Yeah. Sorry for being late.
Okay. Thank you for having a name tag. Ryan. Jacob. We got, okay. Which one is Murphy? Okay. Gabriel. Matthew. Stephen. The other Jacob. Drake. Thank you. Eve. Is there anybody I didn't get? Oh, is the one I emailed? Yeah, okay, great, nice to meet you. Okay, so cash flows. We're just going to start super easy here. So I am going to pay Sabrina $100 to mow my grass. Okay? So I paid Sabrina $100 to mow my lawn, right? So how much cash was I holding to start? Right, it was $100, right? And then I paid $100, right? So I had negative $100 paid for lawn mowing. What's my ending cash? Right, I got nothing left, right? Okay, so what's critical here, right? This is somewhat obvious, right? But I just want to make sure you understand cash flows is the change of cash. So which of these numbers is my change of cash? 100, right? It's this one right here, right? It's the difference between my beginning and my ending. Okay? So cash flows is the same thing as change in cash. Okay. It sounds obvious, but this always trips people up. Okay. Okay, so now I'm starting with another scenario. I'm starting a new company and I have no money, right? And Sabrina is going to pay me $100 to buy my common stock. Okay. So how much in this case did I start with? 0. Should this be a plus or a minus? Okay. Plus $100, cash received. For common stock. And then what is my ending cash? 100. So in that scenario, what is my cash flows?
What's the number?
It's the 100, right? The 100 inflows. I'm out of notes. Did everybody who took one, everyone who took one is going to use it, right? Because I think I printed how many I thought I was going to need.
Contract rather than
Okay. Okay. So we have a whole statement, right? We're going to be learning a statement of cash flows. We have a whole statement that's dedicated to detailing what a company's cash flows are. Why do you think that might be important? Why do we care?
always for public companies so that investors, really any company, so that the investors can see what is going on inside the company, its financial.
Yep, so investors, right, because this is an external statement that we provide to investors so they can see what's going on. Anybody else have any? Yeah.
If the company is able to pay dividends and debt and the taxes,
Say it again.
if the company is able to pay debt and dividends,
Right, they have to have cash flow to pay their dividends and their debts, right? Who else do we have to pay? Who do we pay, like, all the time?
Taxes.
The government tax.
The government. The government, unfortunately, taxes, yeah. Who else? Who else do we pay, like, usually bi-weekly? Employees, right? So it's very important, right? You've got to be able to pay all these things, otherwise you're done, right? Is anyone in here a finance major? Remind me. One. Okay. So finance people love a statement of cash flows, right? They're really into the statement of cash flows. So anyway, it'll be beneficial for you. Okay. So we talked about why they're important, and we touched on some other examples of cash inflows and outflows, right? We pay our employees. What's our biggest inflow on a regular basis? Revenue, right? Our customers are paying us, right? So anything that's going in and out of the company cash-wise is cash flow. Is everybody good? So, like I say here, it's not useful just to provide like just a list, right? A jumbled up list of cash flows. We're going to categorize them. Okay, so it's easier to interpret the statement. So we're going to classify the cash flows. So this is like your first learning objective. You need to know how to classify cash flows. Okay. And they go into 3 categories: operating, investing, and financing. And I'm going to use a bakery example here to sort of help you figure out which is which. Okay. So I make a mean brownie, right? And I might bribe you with them later on in the semester trying to get you to do stuff, but let's say I want to start like a professional commercial brownie business, okay? And I have no money, but I need like an oven, I need a delivery truck, right? I need stuff to run my business. So I need money to be able to buy those things, right? So I have to get financing, right? So how do I get financing as a new business? We sort of talked about it already. Say it again. Well,
Like venture capitalists or bank.
okay, perfect. So we can have sell stock, right? another word for that is equity. Right? We're going to sell a chunk of our business. So if I sell stock, is that a cash inflow or cash outflow? Right, I'm getting cash. That's the whole point, right? So that's going to give me cash inflow. And what's the other way that you just, right, get a loan. So if I get a loan, is that a cash inflow or a cash outflow? Inflow, right? Is everybody good? Okay. So financing cash flows are those two things, but they also can go the other way, right? So I can sell stock, but I can also repurchase it. So if I buy stock back with cash, that is also a cash flow, but is that an inflow or an outflow of cash? Outflow, right? Because I'm paying cash to buy my stock back. Good. And what would be the opposite of this one? Right, paying the loan back. Is that going to be a cash inflow or cash outflow? Outflow, right, good. Okay. And one more thing that's sort of related to this is dividends, okay, right? Because dividends are related to our stock. So when we pay a dividend, is that a cash inflow or outflow? Good. Okay, so those are our financing types of cash flows, okay? So now I have my financing, you know, I sold stock, I got a loan. Now I can go buy my delivery truck and my oven, okay? So I'm going to invest in the stuff that I need to run my business. So this is like the purchase of long-term assets. And if I ever write something that's too messy, let me know. So if I purchase a long-term asset, is that a cash inflow or cash outflow?
Outflow.
Outflow, good, okay. And what would the opposite of that be? Good, so sell my long-term assets. And would that result in a cash inflow or cash outflow? Good. Okay, so now I've invested in the stuff that I need to run my business. So now, the day-to-day, everything else I do is operating. Okay, so this is everything that's day-to-day. Right, day-to-day operation. So it's the things that we talked about. Pay our employees. Right, pay taxes. Pay utilities. Collect from customers. Right. right? And obviously, these top three, are they inflows or outflows? Outflows. And collect from customers, inflows, okay. Okay, so you'll notice that on this sheet, right, I italicized the beginning letter of each of these three. Because, you know, you are going to have to sort of memorize which goes into which category. And if you notice, if you think of it in terms of a business life cycle like we did here, these are in alphabetical order, right? Financing, investing, operating. So if that helps you at all to remember which goes where, that can be helpful. Okay? Does anybody have any questions? Okay, so the next page, right, is we want to see how you guys can do on an exercise. And we will just start. We'll start with you, and then we'll go around the outside, and then we'll come back up here. Sound good? So, collecting cash from customers. So you guys are going to tell me which category and if it's an inflow or an outflow. Okay, so collecting cash from customers. Inflow. Inflow. And then what category would that be? You're getting phone a friend or whatever. Okay, it's operating. Good. Okay, pay cash to repurchase its own stock. What do you think? Yeah. Yep. Perfect. Yeah, and then we have, so stop me if there's ever any question, okay? Borrowed money from a creditor.
Cash inflow and financing cash flow.
Perfect. What have we paid suppliers for inventory purchases?
Outflow. Inventory, would that be finance?
So how often do you think we buy inventory, if that helps?
Oh, investing.
So it's okay. So inventory, hopefully, we're buying it and selling it like repeatedly all the time. Does that help?
Operating.
Is operating, right? So it's the thing that we do, that's what we do for a living, right? We buy and sell inventory if we're an inventory company. So that's an outflow operating. And actually, the other way you can think about it is we only listed a couple things for financing and investing, right? Pretty much everything else is operating. So if it's not one of those three things, then it's operating. All right, what about we've repaid the principal amount of a debt?
Outflow financing.
Outflow, financing, perfect. Okay, this is a tricky one. Back there somewhere, right? Paid interest to lenders. We didn't talk about this, so you're just going to make a guess. Back row? Is it an inflow or outflow? Okay, it's an outflow. And I'll just tell you, so interest is just an operating cash flow. Even though it's related to debt and you would think it's financing, like in other parts of the world it would be financing, bless you, but here it's operating. Yeah, it's, yes. Okay, paid a cash dividend to stockholders. Outflow and financing, good. Sold common stock. Say that again, louder. Yep. Okay, I think, are we at the end of the table here? Loaned money to another entity? Right here in the pink shorts, I think. Actually, this is a really hard one, so if you don't get it, don't feel bad. It's an outflow, yep, because we loan money to somebody else. You're right, why would that be? Yeah, you're absolutely right. We're investing money in another company, so you're absolutely right. That's a hard one, though. Okay, paid taxes to the government.
Outflow, operations.
Yep. Sorry, this is getting messy. Paid wages and salaries to employees. Yeah.
Operating, outflows.
Yep. Purchase equipment for cash.
Outflow and investing.
Yeah. And then paid bills to insurers and utility providers will come up here.
Outflow operation.
Good. Great. All right, so you guys think you could do that on your own? Okay. Right, so the unusual ones are the interest expense and then that investing one. Those are the ones that are a little weird. So remember, interest expense or interest paid is operating. Right, and then loaning money to another entity. Is investing. Because if you think about where that's going to show up on your financial statements, it's going to show up in a long-term asset account. Okay. Good? Okay, so at some point we're going to learn how to create one, but this is, I just want to point out a couple things. So this is a statement of cash flows, just so you can sort of see, although it's really hard to see up there. Mostly I just wanted to point out the three different categories, right? So you'll see it's opposite alphabetical on the actual statement. So we start with operating. So this whole section, starting from the top to here, is net cash provided by operating activities, okay? Because that's the most important thing. That's what we do on a day-to-day basis. Can you guys find the investing? How much cash did we get from investing activities?
130.
Right, and it's negative, right? So what does that mean? Yeah,
I can't see the minus. No,
it's in parentheses, sorry. Yeah, so that means we spent more money, more cash went out on investing activities. And then how much did we get from financing?
-67.
Yeah, so we had negative cash flows of 67, right, from financing. Okay. So if we add up these three categories, we get this $62, right? So it says net increase is $62. Right, so that means the same as our cash flows were 62. Also means the same as change in cash. It all means the same. So during the year, we had net cash coming in of 62. We started with 29, and so we end up with 91. So where in my financial statements might I find that 90, well, I should definitely find the $91. Hmm?
Assets.
Be in assets, yep, on which financial statement?
Income statement.
It's the other one. I know that. The balance sheet, yeah. Remember the balance sheet shows assets, liabilities, and stockholders' equity? I know it's been a while. Yeah, so this would show up on the balance sheet. And if it doesn't, right, you've done something wrong. And then just a note, right, this says ending cash and cash equivalents. That doesn't necessarily mean Like, it doesn't mean you have to be walking around with cash, right? It's whatever's accessible in your bank account that's liquid, okay? Okay, questions, everybody? Okay? Okay. Well, so since most of you, right, are not going to be preparing cash flow statements, what really is important is that you can interpret them, okay? So here I have 3 different companies, and I've just given you the breakdown of their cash flows. So go ahead and calculate for each one their total cash flows. Right, so the math is not complicated, right? What did we get for cash flows?
25 on all.
Right, they all have $25 in cash flows, right? But what's important is what story are the numbers telling us, right? Anyone can do the math. So think about it for a second and just try to decide which, there's no wrong answers, but which of these companies are you most likely to invest in? You're going to go with A?
Yeah, because most of their, well, their monthly cash is coming from revenue from investors.
Okay, so we're voting over here, firm A, because right, they're able to pull a profit or have positive cash flow from their normal day-to-day stuff.
And they're also investing back into infrastructure with long-term assets for themselves.
That's absolutely right. So they're investing, right? They have negative cash flows, which means they're buying more investments, which is a good thing, generally speaking. And then what do we think that might be?
Loans. Or paying back.
We could, well, yes, we could be paying back loans, we could be
Dividends.
paying dividends. Yeah, so those are all sort of good signs, right? Which, is everybody good? Which one of these do you think most closely represents a startup? Did I hear something? C, perfect, C, right? Lots of startups don't make any money up front, right? So that's very common. They're getting financing from investors, right? It's positive. And then what are they doing? What does that negative 50 represent maybe?
Buying assets, I think they can use to get their business and make profit down the line.
Yeah, they're buying whatever they need to do their business, right? They're investing in the company. So a negative number isn't necessarily bad. It just means they're spending money on stuff, right? The one I have a problem with is B, right? Because B is doing terribly as far as their day-to-day goes, right? And but what about that positive 100 investing? What does that mean? So remember, this is from our perspective. So what are the kinds of, what are the investing activities?
Oh, I think they probably sold stuff.
Yeah.
They're selling off assets.
Yeah, does that make sense? So we can either be buying long-term assets or we can be selling them off, right? And that's what that says. We are selling off our assets, yeah, to fund the fact that we can't make any money day to day.
Yeah,
Right.
they're not financing it, they're not paying anyone dividends, they're not just.
Right. Do not invest in that,
The
right?
startup
Unless
is one
there's
of two
some.
ways. You start from C, you can turn to A or B. Hopefully A.
Yes, hopefully A, yes. So see, what's important, and you'll see this on your homework, that I will sometimes like ask you essay questions. Most of the math in here is not hard, but I want to know that you understand what we're doing. Right? Okay. Okay, well, this is not going to happen normally. I know it happened on Monday, but I misjudged how quick both of my classes were today. So that's all I have for you for today to kind of stay on track with the assignments. So I'm going to let you go early, but this is not going to be normal. Don't get used to it.
I was kind of into this. Like, I mean, I think we should go with
I just don't want, because the homework assignments, I don't want to mess up.
No, I know the accounting stuff's like such really easy. And then if you didn't understand dealer, that's what they like how you could just own it. You didn't understand.
Yes, that's right. Yeah.
I have a birthday, bro.
Thank you, Don.
No, bro.
You have fun with?
What, huh?
So you have fun?
Oh, yeah, no, it's.
I feel like Miss Johnson